that. We have our YIS guest speaker here today, Lance Cannon. Lance joins us from our West Coast Regional Advisory Board. He is also an analyst at Hood River Capital. He's going to be leading a discussion today on ESG investing. So I hope you guys have your ESG questions ready. And without further ado, I'll give it over to Lance.
Thank you. Hey guys, nice to see everyone tonight. Like she said, my name is Lance Cannon. I work at Hood River Capital Management. We're a long only, kind of a mutual fund, if you will. Prior to the Hood River, I worked at a distressed debt hedge fund, and then also happened to work a little bit with James when I was in LA, when he was in LA. James and I go back to when he and I were in college together. So I've known James for quite a long time. It's always funny to see him in those videos and then razz him about him later. But anyway, I actually sat with James in LA when he had the idea to start YIS. So it's a privilege to be here to kind of see this vision that he and I discussed many years ago kind of come together. So it's fun to do that. But all right, so you guys want to talk about ESG? You guys want to talk about election? You guys want to talk about whatever? I'm here. I can answer questions. I can just talk. So what's your guys' call? I'm here to help you guys. If you don't have the questions, I can just go too. That's fine. Does everyone know what ESG? Does everyone know what ESG is? Yeah, I see some nods yes, some nods no. Does anyone want to answer that? So I'm the only one that talks.
It's investing in companies with good environmental, social, and governance standings, right? Yeah.
And there's a lot of ways that people can play this type of thing. It depends upon your definition of what those three things mean. I see there's a question about renewable energy. We can definitely talk about that. That definitely falls into ESG investing. So I head up our kind of, I guess, renewable energy investments here at the firm. And it's a pretty exciting space right now. I would have told you a year ago, I didn't think that the ESG space or the renewable energy space would be what it is today. I think there was a lot of, it's not just about like, you know, Biden potentially winning this and there being a lean from the Democrats to be more ESG friendly and renewable energy source driven, but there's actually real use cases out there right now that are taking place. So yeah, I mean, so from an ESG standpoint, I mean, there's a lot of different ways. I can tell you from at one firm I was at, the way that they classified ESG investing is that they would just type in ESG into Bloomberg, and if it checked off E, S, and G, they would call that was good enough. Other guys would say, hey, in order to meet this thing, they would want to meet with the management team. They'd want to talk about what each one of these environmental, social, and governmental type things mean to them. How are they enacting these things from a managerial standpoint? What is it going to mean to me as a shareholder? How can I trust that they're doing their part? And then there's other, and then there's a lot of companies out there right now that are trying to move more in that direction, right? Have more of an ESG kind of centered managerial approach to life. A good example would be Amazon, right? Amazon, you hear Bezos talk about on every conference call how they're working towards becoming carbon neutral. They want to have this carbon neutral footprint. And one of the ways that they're doing that is they're using, you know, they're starting to shift everything over to lithium ion batteries for power. They're looking at hydrogen. One of the companies I've been invested in for about 18 months now is a big benefactor of that with Amazon, company named Plug Power. Talk about renewable energy and kind of this excessive growth. And this is a name that was trading last year at $2 and this morning was trading at 18. So it's had a nice little run there, but it helps to have customers like Amazon, Walmart, Home Depot. They're all trying to get carbon neutral footprints and want to use these products and see the benefit longer term. Well, I saw the chat, so I'm trying to make sure I think about, oh, what do I think about renewable energy? I think it's awesome. I'm a big fan. I think there's a lot of ways to play it too. I mean, so you guys could, I don't know if any of you guys have ever looked at solar companies, but there's a lot of different ways to play solar. From a residential standpoint, there's a lot of different ways to play the lithium ion batteries. And there's actually some other batteries that are out there that are starting to gain some steam that are using zinc instead of lithium ion as their main component. And that's a big deal because, as you guys have probably heard, and if you guys flew before the pandemic, they'd always ask, hey, does that have a lithium ion battery? You have to take them out, you have to detach it because those could blow up and cause a fire. Well, there's not a lot of these power companies, utility guys, they all want to move to more renewable energy type stuff, right? They're talking about wind power, talking about solar power, and then they still have to use the grid to make sure that everyone's getting enough power, but they want to have backup batteries in case that the grid fails, right? So think about in California, all the fires. I don't know where you guys are all at, but maybe some of you are from California, maybe you guys are all over the world, but in California, we had the fires this past year and there would be parts of the grid that would go out. What they want to avoid going forward is that when that does happen, because the fire takes out part of the grid, that they can then shift the power away from the grid, away from the traditional wires and over to these batteries that are going to be placed all over the world. And you can't use lithium ion batteries for that because they could blow up. And if it's hot, they don't work. So that you can't use those type of things. So there's a company that is just getting ready to go public through a SPAC. We could talk about what that is too, called EOS Energy, that has developed these batteries that are made out of zinc that can operate without having any temperature restrictions and things of that nature. That all these power companies are actually buying up. In fact, there was an announcement this morning for them to buy like $250 million worth of these batteries, which is 35 times the revenue last year for that company. So apparently it's working and people are interested in it. But yeah, I mean, so from my standpoint, I'll just tell you real quick on my end, kind of how I look at it from an ESG standpoint is I tend to look at it from, do I feel that they are doing their part to be environmentally friendly, socially responsible, and they have the government in place, the government, I guess, rules and regulations in place to make sure that like we as investors are protected. And so it's not something I can just type in and look at. It's not something you can just have a simple one conversation with them and ask them how are they doing on ESG, but you actually have to ask specific questions about those type of things. So my investment process for this type of stuff tends to be longer than, say, if I was going to go and invest in like, I don't know, American Eagle, right? So if I was going to go buy American Eagle, like that's easier for me to do from an investment standpoint, where if I'm doing renewable energy and I'm also then looking for it to be kind of more ESG centric, it's going to take me a little bit longer to go through this stuff because that's ESG stuff is not just readily available. You can just grab it anytime you want. It is important. I think it is key to a long-term deal. And I think there's a lot of people that do care about this stuff more so than ever. And so you can still ask them those questions like American Eagle, for example, like, are they doing the right thing from a social standpoint? Where are they getting their clothes? What's happening from at their suppliers level, things of that nature. But when you talk about renewable energy, it just takes on a whole different ballgame. So are companies becoming more ESG friendly? And if so, why? I mean, obviously, I just mentioned to you just before, Amazon and Walmart, that's a big deal, right? Consumers care, right? You guys care. And we wouldn't be having this conversation if you guys didn't care. Or maybe you don't care, you're just like, oh my gosh, we have to talk about ESG, it's such a boring thing. So if you want to talk about something else, by all means, throw it in the chat. But so far you're asking questions about ESG, so I'm going to guess that you guys care about this type of stuff. This is something that matters to you at the end of the day. And I would tell you the reason why I think companies care is because they want to have that reflected upon them as well. Their employees care, right? They want to show that they care about their employees. They want to show that they care about their customers. They want to show that they care about their suppliers. And they want to show that they care about the world as a whole. Amazon doesn't need to go carbon neutral. I don't think anyone's going to stop buying from Amazon right now. If they said, yeah, we're not going to do carbon neutral, you're still going to go to Amazon the next time you need something. It's just how it works. But they've made that conscious choice to say, no, we're going to be carbon neutral. And they're leading this. And because they did it, Walmart says they're going to do it. Walmart says they're going to do it. Home Depot says they're going to do it. Tesla says they're going to do it. Like all these people say they're just going to keep doing it because someone took the lead. It can be more expensive to be ESG friendly. It's not the cheapest thing, right? So right now you could go, I mean, look at the price of oil. Oil's down, way down. But that doesn't mean that that's necessarily that. So that means that now if I want to do solar, or I want to do wind, or I want to do hydrogen, or I want to do like pick one of your renewable energy sources, it's going to be more expensive. So it's not cheaper to basically always be ESG friendly. But in the long term, if these companies are the leaders in it, someone has to start somewhere, right? Doesn't just happen overnight. You got to do your own part. You got to do your part. So as these guys all do their parts, more companies come online, more people do it. There's more mass to it. You could drive the price down of those commodities and they become equal or if not cheaper. Solar energy on the individual homeowner can be a lot cheaper. Well, so I don't know if that's necessarily true. I think that solar energy on a residential standpoint can be cheaper, but the upfront cost is not cheap, right? I don't think everyone doesn't just sit around on 25 grand and say like, hey, I need to go get, and that's for the cheap one too, right? So if you said, hey, I want to be in my home, so my house is, I've got a modest home for me and my kids. If I wanted to go and get my house outfitted, it's just an average size home, just to do solar, I would be paying 25 grand, but that doesn't get me to the point where then I can be off grid, right? So everyone in California is doing solar. They're saying, well, I want this because I want to be off grid. It's just the same thing as saying like, hey, if the power goes out, I want to have a generator or something like that in my backyard that I can go flick on, whether it's using natural gas or he's using oil or real gas to turn on. They want to use solar instead. So if I want to do that, it's not going to be 25 grand. It's going to be closer to like 40, 45 grand for my house. You talk about homes that are like 4,000, 5,000 square feet type thing. It's going to be 70, 85,000. Who has that just laying around? Like even the guys in those houses, they don't have 85 grand just laying around, like waiting for some dude to come knock on their door and say, hey, I'm selling solar panels today. Do you want one? This is not, I mean, so I think that the answer there is it depends upon where you're at. In California, it does make a lot of sense. If you're in California, the price of solar versus what you're going to get on the grid, it does make a ton of sense. And that's why people are willing to do, they're doing loans right now for those things. So people are getting a loan that they're put for these solar equipment machines and for the solar system to go into their home, and banks are willing to lend it because they know that it improves the value of the home at this point. And I think that what you're seeing over time, that same system would be 75, 80 grand today, 5 years ago, or even 3 years ago would have been like 120, 130 grand. So, and that price will continue to march its way down. In 5 years from now, we could be talking about that same system, and that system could be 30 grand. Like this is because the components continue to get cheaper. We continue to figure out ways to make these things cheaper as well. So I think that most people are not using it. And then there's other states. I mean, you think about it on a state-by-state basis. Other states aren't offering incentives. So in California, you get huge tax incentives, both from the federal government and from the state to put it in. You go to a state like Montana or Oregon, where I'm at, right? And there's just not as, all I get is the federal incentive. So there's not as many incentives, and my power here locally is cheap. So even if I put in a system, I'm not going to necessarily be saving money. I might be breaking even at best. And so from that standpoint, it's really hard for a lot of people to say, get on board with the fact like, hey, I'm going to go and do this. But then if you're in Oregon, like I am, I only get 65 days of sun a year. So it's not like I'm going to be able to save up a ton of energy on 65 days to fuel my 300 other days. Where California, Arizona, Florida, Hawaii, Puerto Rico, like I'm just thinking about all these places where they just get tons of, Texas, we get tons of sun, but along the southern parts of the United States, they all get lots of sun. And in Europe too, there's some of that stuff happening as well. But someone brought up Nike. Yeah, they've been criticized for child labor and poor labor sourcing, which is funny. They're just got some executives that live next door. So I think from that standpoint, I mean, you're always going, the bigger the company, the more difficult it's going to be to always be ESG, because you don't know, like you have to trust your people that they're going to be making the right choices, and they're going to see the vision of the company and be able to make the choices to go and source stuff that maybe you're not going to see. So the CEO of Nike is not going to be having a hands-on document in his hands for every supplier that Nike has. He would never do anything else. Like he can't do that, right? Nor is he going to be able to just sit there and like check off each one of these things and go and visit each one individually. So he has to have a team of people that go out and do it. And sometimes those people are going to get greedy, I guess would be one word, because they're going to get paid based upon their ability to drive returns, make things cheaper. And so if child labor happens to be the thing, he'll probably say, oh, I didn't know about it. totally blew it. They lied to us. And so it's about making sure you have the right people. So when I think about those type of companies, thinking about from an ESG standpoint, again, this is why I was talking to you earlier about this idea behind, if you want to do an ESG investing, you can't, it's not just looking at a screen. You really have to dive into it. So for example, on Nike, in fact, I'll just pull it up here real quick. Yeah, so Nike doesn't score well on waste revenue, waste per revenue. They score okay on the social side. Governments, they're great. So it's really on the environmental and social side. So what I would tell you on those two things is environmentally, they might always have a struggle just because they're going to be somewhat tied to their suppliers. And if their suppliers say, we're not going to do it, they can say, okay, fine, we'll go find someone else. But if no one else is going to do it, like they don't really have a choice, like they have to make the shoes. So, I mean, they can't just say like, yeah, we decided this year we cut back on production by 75% because no one would make the shoes that we wanted made. So we don't do it. And people are gonna be like, okay, well, I guess I'll go buy Adidas instead. Like, and it doesn't help them long-term. So it's a slow, long and painful process. I can tell you that the guys at Nike are constantly looking at ways to improve that. They're constantly having conversations with suppliers. Nike has gone out and said to their suppliers too, in some cases, like, we will pay you more if you will do this, because they know that it's going to cost them more. So that Nike's fronting it by saying, hey, we're not going to just expect that you give us the same pricing because we know it's going to cost you more to be more environmentally friendly. We're going to pay you more money in order to get you to do this so that in long term, we're all better for it. And it really just kind of depends upon, I guess, the company itself and how I would think about that. Nike, I bet if we looked at American Eagle, so I don't play a lot in the large cap space. I'm a small cap investor, so American Eagle falls in my thing. But I bet if we look at like American Eagle, they would probably have the similar score on environmental, where, yeah, they're not great. And sometimes it's easier to do things differently there. I bet, if we looked at like even some of these like these renewable energy guys, like a Plug Power, for example, I bet they probably are worse on governance, because small cap companies like the ones that I invest in tend to not have the same type of governance you're going to have from like a Nike or someone who's been around, who has grown from the small cap world into the mega cap world. A great example of an ESG friendly company. Well, I mean, I guess your best ESG companies are going to be some of your large cap names. So I'm just trying to think. I would be shocked if you found Walmart on there, just because they've had some issues from a governance standpoint with their employees. Amazon was, if we looked at their stuff, it was not good either, but it continues to get better. And so I don't know if there's necessarily a single name that I would tell you is this purebred ESG company out there. I think that at the end of the day, what you need to try to find is, and what the beauty about ESG is that you can see how they're progressing. And what you want to try and find, if ESG is important to you, and what most of the ESG investors are looking for, is progression towards better. So they're not going to be looking for the perfect company already. If that was the case, then everyone would already be in it if they were an ESG investor type thing. But the reality is like very few companies out there are going to always be the best at all three of those things, but rather you want to find companies who are going to be doing it and focusing on it and getting better. So if we were to go look at Amazon, for example, historically, Amazon was terrible environmentally. But as we've talked about already, like that's been the focus of theirs. They want to make sure that they're getting better from an environmental standpoint, carbon neutral footprint, et cetera. So they're making progress. If from another, I'm just trying to think of some other names here that would probably fit into that. I mean, I bet some of these tech names that are out there. I used to cover Ringcentral, which is the phones, just looking at their stuff. It's a lot of companies are pretty neutral, meaning that they're not the best, they're not the worst. They're just kind of, they're doing their part and they continue to improve. And as long as the scores continue to improve, I think that's what's important. Thoughts on the election? Well, so going into the yesterday, I think a lot of people thought that there's going to be a landslide. At least that's what the markets were trying to tell us initially. And then as the results started to come in, I think people then started to realize, and I think people were more concerned about if it was a Democratic sweep versus just who won the presidential election, right? If Biden won and then they also controlled the Senate and the House, I think investors would have been, that would have been bad for the markets. If Trump would have won, but then the Democrats won the House and the Senate, they would have thought that was great. So right now what we're looking at, and I know it's still not final, but since we're looking at the House is being controlled by the Democrats, the Senate controlled by the Republicans, and we'll probably get a Democratic president according to the last thing I just read. And so that's going to be a good thing, I think, for the markets too, in this sense. I think that most companies are ready for this. I think that a lot of companies have realized over time that one person doesn't necessarily change everything. And so from an environmental, social and governance standpoint, I think that the key here is to make sure that they continue to move forward. And that if doesn't matter who's in the government, they always want to try to make things better. And I feel like that's the most important thing, and what companies are looking forward to is that whoever goes into the office next, Republican, Democrat, independent, whatever, they're going to be looking for ways in which they can help improve the economy and make things better for them. If I didn't answer that, feel free to ask a follow-up. All right, so sometimes it's hard to find information on ESG ratings of companies. So every company in their accounting filings, so their 10K, their 10Qs, talk about ESG. They're not going to say ESG. They're going to say environmental. They're going to talk about social. They're going to talk about governance. And that's where you're going to go to learn about this type of stuff. I mean, obviously, if I could just pull it up on Bloomberg and say, oh, what's the ESG rating for this? Like I get a rating based upon how Bloomberg's done it, but I have to then trust that Bloomberg's doing the rating system, how I feel comfortable and what I want to see from them. What you can do on an individual basis when you get to hold those filings, because those are publicly available to everyone and those are free, is you can read about over time what they've been doing. So once you find it in one of the filings, it doesn't stop. I mean, they don't just stop putting it in there. So if you find it in the 10K, the next 10K, it's going to be in there. And the one before that, it's going to be in there. One before that, and so you can go back and you can look at each 10K at that paragraph and read what are they talking about from a governance standpoint, social standpoint, environmental standpoint. What are they doing to change? And that's one way that you can look at it. That's where I go to find questions that I want to ask them about from each one of the, in which one of those areas about what they're currently doing. So when I find a company where this is important to me, I tend to dive in a little bit more on that type of thing. Try to understand kind of the history, what drove them to make these decisions. How do they feel like when they said they were going to do X, Y, and Z 4 years ago and where they're at today, did it progress the way they thought it was? Why did they maybe miss the target that they provided 4 years ago? Or what's holding back them from meeting that target at this point in time? See, ESG is an interesting dynamic. And I think you're going to see more people interested in this type of stuff going forward. ESG ratings are done on each agency does it differently. Everyone does it different. Like I said, I do, for me, I look at it differently than anything else. Like I can pull stuff up on Bloomberg. It doesn't really matter to me what it says, because at the end of the day, I got to go do my own work on it. ESG isn't like, your financials yet, where if one source says, hey, it's going to be $20 or it's $20, one source says it's going to be good and the other source says it's going to be bad, that I'm just going to take it at face value. I got to go in to find out why, because some of these guys might be wondering what they're doing. There you go. There's a link for ESG. But anyway, I don't know if there's much more else to say about ESG. If you got other questions, I'm happy to do it. I can walk you through kind of an investment pitch, or I don't know what you guys want. You tell me. I'm here to work with you guys. Go ahead, anyone, if you want to talk. Or
Yeah, I was wondering. So I've kind of heard that in some countries they're trying to engineer a regulatory system where carbon credits can be bought and sold. Is there a way you envision for that to work, specifically, that would be like successful and sufficiently sort of like free and effective?
I think it's early to say how that's going to shake out. It's an interesting dynamic, right? An interesting way to kind of present it. A lot of these renewable energy companies are definitely going to benefit from that, as they will create those carbon vouchers, if you will, and then can be bought and sold. That's another way in which they could then make money. I mean, think about Tesla. I guess I think a lot about from Tesla's standpoint, right? Tesla early on, every time they sold a vehicle, they'd receive these credits, and then they would turn around, they would sell to like Chevy or to Chevrolet, to GMC, to Ford, to Chrysler, because they could then use those credits and take that as a write down, where Tesla wasn't making any money, so they couldn't actually use the credits. So they just turn around and would sell them. And I think a lot of these renewable energy companies will find that that's a very profitable business because it's 100% margin. You don't really have to do much to sell these credits. I think the bigger issue is going to be is how do they create enough of them? Because I think there'll be lots of demand for those type of things, particularly from like your Chevrons and your Exxon Mobils and whatever that are out there that are probably going to be more likely to use those type of carbon vouchers. But I think the bigger issue is going to be is like, how do you regulate them to make sure that they're then being used in the right way that is encouraging people then to move towards more environmentally friendly consumption? If that makes sense. So
Yeah,
there's a question. Does that answer your question, or did you have?
Yeah, I was just gonna add on that. Like, I guess it's kind of hard for every single bit of emissions to be offset, given how much a lot of these companies already produce.
I think that's right. I think you're going to have. It's a long. It's not a simple thing, right? You can't just say, we're going to go ahead and do this tomorrow. You're going to have to. It's going to take some time in order to do it. And I think that's the important thing here, is to understand is that this is not something that you can just solve overnight. And it's not going to be something that's going to be solved in the next 5 years or 10 years. It's going to be something that's going to be 20, 30 years. I mean, when you talk about renewable energy and a lot of reports out there, they're talking about 2050. Have you guys even thought about how old you're going to be when it's 2050? I mean, I think of that like, oh, I hope I'm around, but you guys will all be around. And I think that kind of gives you an idea as to how long this may take. Granted, can it go faster? I think it absolutely can, right? I would have never thought last December when I was looking at Plug Power that hydrogen fuel cells were going to be as hot as they are, and that Amazon was going to want as many as they can possibly get their hands on because they're more efficient, et cetera. And so it doesn't take much. And all of a sudden the ball starts rolling. It might start small, but once that ball gets rolling down the hill or down the mountain, get big real fast. And then that momentum will just carry it and just accelerates, and each turn gets bigger and bigger. It's pretty amazing. All right, so ESG become more quantitative. So I think it's probably already quantitative, right? I think there's probably some quant funds out there that are already using this as built into their quant models and their algorithms that are taking into consideration some of this ESG stuff. There probably some of these, I haven't looked at, so I'm not very familiar on the quant side, I'll be honest with you. But I'm pretty sure there's probably some quant funds out there that probably are pitching quant ESG funds, saying, hey, all of our stuff is done, this is how we do it. And they're probably then sharing with investors, like, here's the algorithm, and this is how we find the stuff, here's the data we're using, et cetera. And if investors are comfortable with the data that's being used, then they go ahead and say, yeah, I'll do this type of thing. I would imagine, just like anything, it's going to be quantified. It's going to be some type of ordeal where you're going to have this put into some computers and it's going to spit itself out. But I think just like everything, there's a place for that. Like, I have no problem with quant funds. I think they're great. They created liquidity. They do a lot of good things, I think, from the market standpoint. They can also be frustrating, right? Because all of a sudden the stock will move and I have no idea why, and no one knows why. It's just, well, must be some. The fallback is always, it's a quant fund. Quants are doing it. because no one knows. There's no other reason why until they didn't report and then you figure out there was a reason. But yeah, I mean, I think that's where that is. I'm not familiar with GRI. If you've got any thoughts or you want to expand upon that, I'm happy to take a stab at it. How does leveraged exposure work? You talk about like, Ryan, I guess, are you talking about like levering up and trading on margin or options or warrants or any?
So like just how like some companies or are not companies, just like those like stocks where it's like, instead of going like up 1%, they go up like 3%. Does that make sense?
Sure. Like why does a company go up 1% or 3% instead of 1%? Is that what you're asking?
Yeah. It's like, so like, just like a fund, and then maybe like it would go up 1%, but then since it's like leveraged, it would go up 3%. Like, how does that work?
Sure. Yeah. Well, I can take a stab at that. So think of it this way, like, let's say you have $10 and you go and invest it and you find something that's going to return 10%. So you would get back $1 if you just invested your $10, right? But if you wanted to talk about, leverage, what if you came to me and said, hey, I got $10, I want to, and I give you, hey, I'll give you, you can invest your $10, but on top of that, I'm going to give you margin or leverage that's going to let you then go and invest 3 times that. So you take that, instead of investing the $10 in your investment, you invest $30 in your investment, and you go and you get 10, and you get that same 10% return. You then get $3 back, right? You then pay me back the 20 extra bucks that I gave you in leverage, and then you get to keep your profit. That's how you get, I mean, the very simple way of explaining leverage and how that works. It's extremely, I would not recommend it. There's lots of stories out there over the last 6 months of people on the app Robinhood that they just offer up leverage freely, it seems like, to anybody without much of any type of direction. And then you've got people that are out there, they go out and they leverage stuff up there, levered 10, 15, 20 times. And the next thing you know, when the stock goes down, because it doesn't always work this, if it goes down 10%, you owe me $3, right? So then your losses are amplified as well. So it's not just hey, it's not just on the flip side where, hey, I made money today and I made more than I should have because I was levered. If you lose money that day, you're going to lose money. That's going to be painful. So when you do, if you ever get to that point where you want to explore with that, I would highly recommend that you have had a lot of experience and have tried this stuff from a paper standpoint through and through, and be honest with yourself on the paper side before you decide to try any leverage stuff, because it can get ugly real quick. I know a friend who said he was going to do it leverage back in 2017 when Bitcoin was like the thing, and he went out and he got leverage, and the way he got leverage is he got a second mortgage on his house and went and put it all in Bitcoin. He doesn't have that house anymore. I'll leave it at that. So be careful. Don't do things that you can't pay. Just like anything else, you're not going to go out and buy. You guys aren't going to go. If I said, hey, I'll sell you guys a Porsche, but you got to make the payments in 2 months, I would hope most of you would say, okay, yeah, I'm never going to have that kind of money to pay my Porsche. Well, maybe you will, I don't know. But you're probably not going to have the money to pay the payments on the Porsche, so you're not going to take it. Just because someone offers it to you, doesn't necessarily mean that it's going to be free. There's no such thing. An ESG investment report. Well, I want to see this. Yeah, so I can walk you through an ESG investment report real quick. So why don't we do, let's do one that's we'll do renewable energy type stuff, because that tends to be more friendly from this standpoint. There's a company by the name of Sonova Energy International. The ticker is NOVA, Nova, NOVA. This company makes solar panels and does solar installation on the residential side of things. So if They work in California, Florida, Texas, Puerto Rico, Hawaii, like all these places. My investment in them was ESG centric. And we did take a long time to go through this. It took us approximately 7 months to get through our initial due diligence to get to the point where we're at today. And basically what I'll just be, I can't remember, are we done at the top of the hour? I already over it. Don't want to be taking too long, so.
It's fine, Len. You can finish this up and then we'll wrap up.
Okay. So just real quick on this, the way we looked at it was from an environmental standpoint. We looked at it from both where they were getting their supply of the panels, the batteries, all that kind of stuff, making sure that they're taking their side of this kind of environmental friendly side of things seriously. So we went and spoke to a lot of their suppliers. We spoke to 15 suppliers. We then spoke to the company. We talked to their then dealers that are then installing these panels and stuff like that on the people's homes, make sure that they're doing this in a way that's environmentally friendly. From a social standpoint, we looked at the number of women that are employed. We looked at just the diversity amongst employees to make sure that we understood that they're giving everyone an equal chance. And then we also talked to their HR department, who would talk to us about how their hiring process went, to understand exactly what they would do and how they would encourage to make sure that the posting was seen by everyone, and that they weren't then screening people out based upon race or where they went to school or geographic things of that nature, et cetera. And then we also then talked to them about government. And then from the government standpoint, we talked to management and we talked to board members about how they feel that the governance is set up. Does it allow for them to have their own say? And if they didn't agree with management, is there repercussions back to them that they meet with them will lose their seat on the board? Because that's a bad thing. They want to be able to say that type of thing. And then also, how do they talk to management? How do they talk to investors? Do they converse with us? Do they talk with us? Do they help us understand the things that we're trying to understand about the company so we can make a wise investment choice? And that then also that we are not then being pigeonholed into a corner where then management has the stronghold on us and then they get to make all the choices and we're stuck with that. So just those three things were the things that we looked at really quickly from the standpoint of that business. We obviously dove in a lot more, and then we looked at also the financials of the company that had to make sense from a financial standpoint as well. So it's not just about an ESG thing. Like I never have made an investment where I just said, hey, look, they're environmentally friendly, they're socially responsible, and they have great governance. Like that's really great that you have those three things, but now the rest of the business has to actually make sense from a financial standpoint, and it has to be valuation wise has to be where I think it should be at a discount relative to where I think it's going to be, and that there's a catalyst out there that can get me to the point where I want to feel like it's fully valued. So anyway, I hope that helps. It's a pleasure to meet you all. Thank you for the invitation. If I can ever help, I'm always here.
Thanks so much, Lance. I couldn't ask for anything more. Your knowledge on ESG investing is fabulous, and you were able to answer everyone's questions in the chat. So I really appreciate that, you taking the time. And I just want to let you know, and everyone else know, that YIS is working on some ESG curriculum to add to our courses and lessons. So that's coming soon. We're also adding an ESG component to our stock pitch competition in the report. So looking forward to that. So, and I'm sure everyone it could be excited about what's to come. So thank you so much, Lance. It was great to see all of you guys today. I hope to see you guys next week.
Yeah,
Bye
take care. Bye, everyone.
Thank you.